Welcome to TradeTheMBI.com. This is John. This report is for the 23rd. Scroll through the numbers. The week ended well up, but it was still soft as far as the amount of points moved. We're getting a very narrow range at this particular point. Wouldn't call it a malaise. It's just you've got a situation where there's still enough liquidity in the market that any sellers are just being bought up. So nothing tragic or shocking. Scrolling through the S&P right there real quick. Looks pretty decent as far as buy-sell ratio mixes here. You have some in sell, some in the buy, so that's all healthy as you get a rotation. High flyers, we'll do some of those. They had a little bit of a weak day on some of them. It was a little misleading because some of them had dropped and then popped back up. And scroll just through the bottom here. Hoping to have the changes on our radar screen very shortly. It's moving along nicely. If we look at our daily chart, obviously we had the signal from the cyan candles that started this run. Not a problem. We are overbought in the sense that we have positive extremes. This is becoming a little bit more delicate here because now with the steel dipping, as it gets close to the cyan here, if it drops below, what it's going to let us know is that we've got an aggregate of a little bit of quiet selling taking place. Particularly if we see the cyan pivot up at all, would be a key that, potentially like here, you'd end up with a soft decline. So that's something to be worth noting. I mean, if we look at our daily here of the MBI Opus that we've been talking about, had its buy set up there, I would be utilizing a stop at this particular point to protect that from a daily standpoint, just ensuring that there's no backslide. And if it did, then you just put your buy stop above it and re-enter as it dips lower, because then we can also take a look at the 50K. You see the stop is raised all the way up here, very close now to the current price tag. Now, obviously, the full 50 bar has to close below it within a sell configuration for that to take place. The positive side of it is we have higher red pivots. That's positive for good. You have higher green pivots. So, and you're in the safety zone with steel. This should result in just modest, if any, pullback at all. So that's what we're relying on there. But, we're duly warned and noted. I mean, obviously, the first bar from the open had its positive extreme, which is 48. So kind of where I would be looking for softness to want to backfill that in. And if we go all the way back, we have positive extreme down to the 43 level, though that was met over here, and that following day it came across and sort of contacted it at that particular point. It's right at like 44 was the low, I think, yeah. So it was pretty close to that one. So that's fine from that aspect, but always important to point those things out. I don't even know if it's worth talking about the intraday because it was just sort of ho-hum. Here it is. Started off nice bounce. Boom. After that bounce, a couple little retrace signals moved across in there. Retested back up at the highs, got a little bit overbought on the positive extreme, and all it did was retest that and stayed pretty much flat for the rest of the time period. So boring beyond belief, but still moving in the correct direction for our particular setups. NASDAQ, likewise, same configuration. Is a little tighter with the cyan here being closer to the green, so pivot of the green below would be a little bit more significant from a sell standpoint for the NASDAQ. You can see it just has not moved here in a couple of week time period. People are waiting for a catalyst to do one thing or another. And of course, end month's coming, so we may see a little bit of play there, but you're going to have new influx of capital to start the month, and that's going to have to go somewhere. Here you can see green moving back above on the YM. So the YM was in a little bit of trouble there with the previous settings. Still not terrific because, the cyan dipping needs to get below the red here. Red is rising. That's been helpful. So now with green back in control of things, it looks a little bit more healthy. The key will be to watch to see if we get a spider to start at the beginning of the week. We do have the red dot in here, but at this particular point, it's still strong enough that it's holding up and not overbought. So a little healthier on the YM there, I think, overall from it. Oil continuing to spike up a little bit. So that's keeping that, and it's been in the safety zone. It's also been well below the red-white, so we weren't expecting too much of a moved from there and basically just dipped below the ABM yellow. Didn't even get to the magenta, so it's been pretty strong. And that's not going to put too much pressure unless we see a spike from it. I think if you get over the 40, you'll probably start to have some concerns about growth issues with that. And obviously that's tension related worldwide. TLT still within a sell signal on that, even though it popped back up a little bit. We had looked for the retrace coming off that, so no longer in the deep red. So that's an important aspect of it, but doesn't look particularly healthy at this particular spot for a new buy yet. We are looking at what I would love to see would be a dip of the steel going back below green, and or even green dipping below red and coming back above. But if you make a new high from the red breaking into above negative 7.5, that would be also a power statement of new buyers. Gold coming off of the nice little bump, no change in it from that standpoint. Sure, still overbought in that context of it, but all looks good as far as cyan below the red and white. Red is skyrocketing all the way back up to zero. Now it's key that it breaks above that to maintain it. But little dip pivots, opportunities to again get in. And moving on to the euro, just pretty much a flat line coming off of the deep red, no longer in the deep red, and we've seen some rising, so the potential of seeing the euro pop just a little bit here is there. It's been kind of weak. We need to see the cyan fade off there. Steel hanging up in the higher altitude would be interesting to see that dip down, because then you would look for a solid punch, but at this particular point doesn't look to be ready to move a whole lot from there, and just a gentle rise of the red is enough to keep the bullishness of it. But I mean, what are you looking at? I mean, you're not even looking at too broad a range. It's just going to stay within this configuration. So, and no threats with currency means that the market's not going to be jolted. X just holding on. Bearish actually flip here, and then new spider set up with the cyan going above, so an opportunity to tighten the stops and or just take the gains on any move that from way back here at the orange dot. There's a decent little pop in it. Nothing too dramatic. CLF started to get closer to something positive with the breakout of the red in there, and that should result in a move to the upside. The only problem was cyan tilted back up. Green couldn't break above it. Got a little bit overbought within that little climb right there. So it's got enough to be able to take it. I think ideally what you'd want to see would be the dip of the green back below, and then a new buy setup would be prominent for an opportunity to jump into it. JCP eased off of its positive extremes, which that's all we were looking for, was a retest on that one to come back down. Still look pretty healthy within its overall setup, and it's reconstituting a new buy configuration. This could be an interesting one, because if it pops up there, it would be pretty powerful at that particular point. And WLT had shot up nicely from our first look at it when we talked about it at 440 range, and right here at the 460 it dipped below with the steel for the first time in a long while, and that turned around to be the perfect buy setup at that particular point. And then it just got a little overbought there up at the peak points, and started to roll over just a little bit, but it's just kind of eased some of the overbought. But nice improvement from the 450 all the way back up into the 550, almost reached that $6 range. Let's take a look at some of the intraday stocks. Apple, we had been talking about Apple for a little bit here, that had been easing off, got into the deep red, so we were a little bit hesitant, waiting for a new setup to develop as far as opportunity to get in again, or make an additional move. Not quite there yet, but we weren't worried for those that were holding on to it from this dip, because with the steel so far in our safety zone was not problematic at that particular point. We go on to Amazon. A little bit of weakness from it. It's just been in flatline mode. since right about here. We've been seeing a slight creep up with the red, but it crossed back below. The white and the green had stayed below. We were just waiting to see if cyan was going to make a move. It got near overbought within this configuration, so just a little bit of weakness. Hasn't given a turnaround signal. Again, I'd follow intraday on that one since it's still in between, but it looks like there's shorts a little bit more of an advantage on it. Nothing with Baidu. Deep safety zone. Has had the cyan above for sell signal for a little while here. Just not moving much, and that's kind of what you'd look for when you get that steal. No significant breakdown, and what we'll be looking for would be a turnaround pivot that brings us back above, well, this previous low one right here, or breaks back above the top side. FAS, something we've been looking for as long as it remains healthy. Not a whole lot to worry about in the market. It gotten a bit overbought. Continued to make the nice move as the cyan has dipped below the green and the red, maintaining it. Problem is a pivot here is going to be a lower red pivot, and we would expect that that's going to retrace fully, particularly since it's not going to make a consecutive higher one. So, and you're going to be at or higher price, which is a real problem. So that could spell the end of the rally as we see it going forward. Facebook's been a flat line, and you need to talk about that. That's one of those you can just follow the little intraday. And Google, even though yellow candle, we're in deep red at this particular point coming off of it. We've risen pretty high here on the extreme. Any rollover now is not going to be particularly healthy, and it's going to take you all the way back to the overall lows. So people say to me, well, then can I take the buy? Yeah, you just have to be very cautious with it, and or look at any weakness as the potential for retracing back down to that low. So you have to really follow your intraday a little bit tighter when you get that kind of a signal coming in with that deep red. And Netflix has been perfect. No change there. PCLN has had spot moves of a little bit of green. It got unhealthy with the negative red. And again, likewise situation was pops in. Yes, you can look at the buy, but you have to understand that with that negative readings there in the deep red, you're likely to retrace that low. And sure enough, even in the little pop, still weakness. In fact, now you have the spider, so we would expect a little bit more, particularly if red rolls over there. It's got to break above that negative 7.5 range for it to be active. And Tesla, we had seen the nice pop off our buy signal down here. Yes, overbought from that standpoint. Fine, you just pick this. Actually, I can go ahead and mark where I would be putting the stop because that's exactly what I do. I just create a new parallel, color it red. Just like that on TradeStation, and I'd be right in there. Barring that, ABM, very helpful because it's going to start to baseline across here. And if we go and add the ABM right to it, you can see it like that. You see how amazing that is? Just a fraction higher than the ABM, which is a 220.51. That's exactly why it's there and what it's for. And we'll leave it on while we switch over to Twitter here for final one. Look at that beautiful, slow, gentle rise of just muck. Finally, you've gotten the cyan mixing and blending with it right here. It's not suggesting any change, I think, as you've seen this gentle rise of the red keeps making new highs. So as long as that keeps taking place, just keep following it. I'd be using the magenta stop at this particular point. With the cyan rising above there, if it creates any further separation, then I'd be moving up white or a little bit higher from there. So there you have it, the general softness of summer, I guess is the easy way to describe it. And hopefully things don't get crazy, but the potential for them to is always there. And so that's why we have to stay active in our vigilance. And that's what we'll continue to do. So continue to look for me in private Twitter feed, Stock Twits. As always, trade well.